Hello, dividend growth stock investors. Once again, it is Colby, the DGI Crab, and welcome into episode 4 of my bi-weekly series called The Great ETF Race, where I am investing $5 every single week into 8 dividend-focused ETFs to see which one of them is going to be the best investment over the long haul. The purpose of this series primarily is just to show that anyone can invest, even if they have a small amount of money to go into the market and not very much knowledge in terms of picking out individual stocks and maintaining a spreadsheet like I do and looking for value. You could just dollar cost average into 1 or 2 or heck, maybe even 8 ETFs and still be able to build a nice passive stream of dividend income. I'm not a financial advisor. None of this should be taken as financial advice. I'm just sharing a strategy with you. All right, everybody. So if this is your first time here, I'm utilizing the SoFi platform for this. SoFi makes it very easy to just set up automated investments on a weekly or bi-weekly or monthly, just recurring basis. So that way you don't have to even go in and mess around with investing manually or trying to time the market, which is really a great strategy to utilize when it comes to ETFs. So the 8 that I've picked here, you'll see, is SPYD, DHS, DGRO, SCHD, VIG, VYM, VYMI, and VBR. We've got a nice collection of different types of ETFs. They do all pay dividends, but they utilize different strategies, have some different holdings, and they're all quite popular in the dividend investing community. So last week, SPYD, the Spider portfolio, the S&P 500 high dividend ETF, was our total value front runner. It still is. And as I mentioned before, if you're watching my Friday videos where I go through each of the 4 tiers, where I'm covering the 60 high-quality growth stocks that the channel focuses on, the Tier 4 investors, the income-focused 54 and older crowd, just haven't had a lot of value amongst the individual stocks in that particular grouping. So it still comes as no surprise to me that this high-yield-focused ETF currently is doing the best job of growing in share price value. I don't know if I necessarily anticipate that to continue on long term, but it's certainly been the case ever since we started here. Now, this is the 8th week that I have been employing this strategy, which means there's $40 invested now into each of the 8 ETFs. And you'll notice here, still don't even have a single full share of any one of them. So don't let that discourage you. If you don't have the available capital to buy full shares of a company or of an ETF, it doesn't matter, because platforms like SoFi or Robinhood or Webull, so many of them out there, allow you to buy fractional shares for as little as $5, which of course is what we're doing here. The next time that we meet, we will have more than a full share of SPYD, but again, doesn't really matter a whole lot. What we're really looking at is the overall value, how they're performing, and even more importantly, the dividends. So one quick note here, I will mention that I do have a referral link in the video description below to SoFi. So if you don't have a SoFi account up to this point and this looks interesting to you, if you click on that link, sign up for an account and fund it. You do have to put money into it. Then you will get a sign-up bonus, and I will get a referral bonus. I don't care about the money. I'm not doing this channel or any of this stuff for money. But I did offer the last time around, and I'm going to keep the offer going, that if you use my link and sign up for SoFi, just send me an email at dgicrab@yahoo.com and let me know what you would like me to use my referral bonus, what you'd like me to use that money on, and I will purchase it live on a video, and I will hold that position forever. I will not sell it. The only stipulations are, it just can't be one of these 8 ETFs, because I do want to keep the the amount invested in these just the same and keep this strategy the same. And it has to be a stock that pays a dividend. That's it. I did have somebody last week that took me up on that offer. We're both still waiting to get that referral bonus. It does take a certain amount of time, certain amount of business days after the person funds their account for it to come through, but we're both anxiously awaiting on that, and I'm going to be really happy to add the stock that person picked. I'm going to keep that a secret for right now, but again, that offer still stands, and I will not sell the stock unless it's very, very dire circumstances for the company and it's just time to bail. But I'm gonna hold it forever. That's going to be the intention. I do want to shift over here to my spreadsheet where I'm also keeping track of these. Now I've got this sorted out by value as well, but this is just going to make it a little bit easier for us to see some other statistics. So for example, because I started this right after most of these companies or ETFs that pay on the third quarter or the third month of every quarter, it's going to be a little while longer before these pay out dividends. Now, DHS pays out monthly dividends, so that's the only one where we've gotten a dividend payment so far. But eventually those dividends are going to start rolling in, and the amount of annual income that these 8 ETFs are now projected to supply me with has gotten past the $10 mark. So little minor threshold here, but hey, every little bit is exciting, and it's, dividend growth investing is a marathon. It's not a sprint. As my guy Ari over at Investing with Ari, his excellent channel, he always likes to say it's not get rich by Tuesday, which is a fine motto to have, but it is getting quote unquote rich gradually, stably, and pretty safely. Our yield on cost right now overall is 3.19%. Not a terrible yield. You can see there is some variation in the yields of these funds. The lowest yielding one is VIG, but VIG is also very likely going to be the one that grows the dividend the most consistently year over year. Maybe SCHD will be able to keep up with it because it's done a great job over the course of the last 10 years in growing that dividend, but we'll just have to wait and see how all of that plays out. Will DHS have a bit more of an edge because it's paying out paying this out monthly, whereas all the other ones are not? And the only other impression generally that I have on this right now is it is kind of interesting that half of these funds are Vanguard funds, and they are taking up the 4 bottom positions. Schwab and iShares, Wisdom Tree, and State Street are all outperforming them thus far. What do you all think? Do you think that trend is going to continue? Do you have any predictions as to which one you think will be in the final front position at the end of 2024? Let me know down in the comments below. And whether you are going to sign up for SoFi or not, I will always encourage you to email me any questions that you have that you'd like a detailed response to dgicrab@yahoo.com. I've got some videos coming up from some viewers that have emailed me in some questions that I thought would make excellent videos on. So we're going to have some of those coming up here this week. I'm really excited about it. I hope you'll tune back in. And I hope that you will, if you'll watch anything that I put out, I hope that you'll tune in for the Friday videos where I go over the 4 tiers, the 60 stocks that this channel focuses on, and try to determine where the value lies for our investment dollars. So thank you so much for tuning in. 2 weeks from today, we'll be doing episode 5 of the great dividend ETF race. And at that point, I'll have $50 invested into all of these, and we'll see if anything is different at that point in time. Thanks a lot for tuning in, y'all. Patience and perseverance accomplish all things. See you next time.